How you guys doing? Welcome back to today's lesson 38, the 4 indexes that I use. Now, it's probably no surprise the 4 that I use. If you watch my YouTube channel, I use the SPY, the NASDAQ, the Russell 2000, and the Dow 30 Industrial. Those are the 4 that I always use. So today, we're going to talk about those 4 indexes and why they're super important, and we're going to move on to the 11 sectors that I like to look at and go on from there into looking at some extra tips and then going on into our section all about goal setting. So today is going to be a fairly quick lesson. We're going to talk about the 4 indexes that I use, why I use them, how I use them, and some absolutely fantastic tools and tips for you. I think I have some really good stuff here of how I look at it, how I use these things, and some really good indicators that really shed light on what I do, how it helps me find good value, and act upon all the great things that I see in the market to really have a good winning percentage and lower my risk overall. So we're about to start building that third wall we want to work on right now with our large indexes. So y'all, with no further ado, let's get into it. So the first index that I use is -ES or the SPY. Now the S&P 500 is usually considered the top 500 companies, usually in market cap, that move up and down together, and this is a great sign of how the stock market's doing. A lot of folks use this for the overall health of the market and how well it's doing. A lot of folks use the Dow 30 as well. Both have pros and have cons. The pro of the Dow 30 is that it's the top 30, and so when that does well, it's really good gravitational forces to pull people higher and pull our stocks higher. The negative is it's only 30 stocks, while the S&P has 500 that change pretty often, right? But it has 500, gives us a good variety, and it's a really good starting place for an investor to watch the markets. So I have some charting. I'm gonna show you what I do and how this works for me. So let's check out the S&P 500. So this is SPY, SPY. I like to use the 10-year occasionally. Come check it out. So this is what's interesting, because a lot of folks are like, oh man, we're always overbought, always doing so high. Well, I mean, this is fairly intense, but I mean, if we were to measure, like, let's just say from here over 570 days and made 30%, I mean, we can come back over here, 570 days here made about 37% too, and it never came back down. So a lot of folks who just overreact because they have short-term confirmation bias and like, it's always gonna crash. Well, I wouldn't go that far. This is a fairly intense uptrend, and I'm gonna keep that in mind of what we're doing. But I mean, you have your consolidation periods, uptrend. Consolidation periods, uptrends. This is what the stock market does. You go up, you come down some, you go back up, right? So what do I do when it comes to charting? What's going to be interesting and what I suggest you do, and we'll cover this, I'll put the letters on the screen. I only chart on the -ES while I keep the SPY clean, so I can always come back and do modifications to it. Where I'm going to show you some really good tips and tools on how to chart these together, but if I were to use the SPY, which is already clean, I use -ES as we can see for my charting. So if I ever have anything to look at SPY, I can use different kind of drawings, like, oh, maybe we're making a new trend line here, right? Let's see, oh, maybe we're making a new resistance here, maybe it's breaking out, yada, yada, yada. I don't gotta go back to -ES and mess with my charting, right? So the first tip for you, choose whether to have the spiders or the mini futures. The mini futures are -ES, -NQ, -RTY, and -YM as charting, or choose the chart on the spiders themselves, which are gonna be SPY, QQQ, IWM, and DIA. If you can have one of them being dedicated to all the charting and one being free for other things to add to it and modify and check and do some different tests on, that may make your life a whole lot easier, right? So this is SPY, SPY. I think it's important to understand that we have great structure within the stock market. You can just see clearly we have supports and resistances throughout. I mean, you have this resistance here becoming a support. You have this resistance getting tested here and tested there. This old resistance became a resistance again, support, all these kinds of great things. Everything with the stock market applies here as well. So what do I do to have good charting? I'm going to chart what we have now. So in a few years, you come back to this and the chart is not uptrending, it's consolidating and going down. Just do the same steps in reverse and try to do your best. The Russell's going consolidating sideways, so that'll be good for us to check out as well. But if it's downtrending or wedging, again, draw it and then redraw it and redraw it and redraw it as time goes on and changes. These will change over time for sure. So what I like to do first when I look at my charting is to find trend lines. Now, the S&P seems to have a nice uptrend just like this, right? And again, this has changed over time. You can see this uptrend over here was more this angle, but now it's kind of taking off higher. So I'd erase that and go from here, just like usual. I'm going to draw myself a nice uptrend like this. I'm then going to duplicate this and come over and see if possibly this works out. It does work out very well. It's very intentional on purpose, right? So you can see a really nice resistance trend line here. That hasn't hit it recently. You could probably draw one like this and see it getting closer. But for now, this makes sense to me. Looks good. I like this where it's at. Great resistance trend. I'm going to extend left both these so I have it looking nice. So this looks pretty good here. What's next? I'm going to try to identify on the same angle, the same structure here, the same price structure. Do we have regression lines or halfway lines? Does the stock bounce before these trend lines? And let's see if it does real quick. So what I'm going to try to identify is there trend lines for these bounces here, like this, and this. Does the stock bounce? Ooh. So does the index bounce off these spots too? I'm going to duplicate and bring this on up. And we can see it gets close, right? It looks like it looks pretty good. Probably about here would probably be a really good spot for it to bounce off of. Now it's a bit high. It's 2% wide for the index. It's probably pretty thick. So I'm going to come down and say probably right about here is good. So anywhere from here and down is a really good deal. Let's do the same thing with the resistance trend line. Let's come down and see if it bounces beforehand anywhere. I'd say probably right about there looks pretty good, right? Right here, we can see all the bounces that we got. Bounce, 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 bounce. Looks really good. Why is this important? Because in the stock market, what do you want to do? Buy low and sell high. Off the bat here, we've now established two spots of where we can say we buy low and when we sell high, right? So I think that maybe this resistance trend could be a little bit lower for the new structure that may be forming here. But for now, you want to buy anytime we get below this area. Looks really good, and sell up here. But that's only been what, 7-8 times this whole year. You're not going to be able to do that, right? So what you can do is add extra lines, or what I like to do is add a regression line. The regression line will go right down the middle and find where I think half the action's above and half the action's below. That way, when you get below the regression line, you know you're buying low, and when you get over it, you're probably selling high. Again, this only works if the price structure is pretty like this. A lot of the indexes always have these, but as long as this holds, that regression line will be invaluable to you to know when you're buying low and selling high. So with the same exact structure here, I'm going to take this line at the bottom, duplicate again, come up and find about halfway up. I'd argue it's probably right about here. Looks good to me. A lot of action bounces off this spot as well. Make this purple is what I usually do. And as we can see now, we have our buy low, which is this half, and our sell high, which is this half. Again, on smaller time frames, like the 10-day, whatever, you can see probably some new patterns forming. Like you can see in this trend line here, and apply the same exact concept right here with a regression line. You can see this wedge falling, just like this broadening wedge that broke out eventually. All these smaller time frames have this, but I have to use the macro scale because what I'm trying to do on my OTC tickers and my smaller time frame tickers is buy low, sell high. This is establishing where I could say we're buying low and we're selling high. Next, let's add our supports and resistances just like always. Interesting enough, which is not going to be very helpful, is that we're at all-time highs, so making a resistance doesn't make much sense here, but making support does. And we can see right here, an old resistance became a support. That looks really good here. Of course, we could probably come over here and say, all right, well, the resistance for now is here until it breaks any higher, and then we can move that up. But that's probably fine right there. And there's our charting for the S&P 500. One more thing I want to add. Historically, we have 5, 10, 5% pullbacks every few years. Not that many, but when it does happen, you know you have either A, a fantastic value, or B, you got about a month of recovery until you get back to where you were, which is a great time to buy, honestly. And so what I like to add to most of my S&P charts is a 5% pullback line. This way I can just track where I think the 5% pullback can come to, and that way I can look out for, because if it's a really big pullback, I know what's happening. We can see right there is a 5% pullback. I'm going to take my line here, put that there, delete this one, which is 5% from where it is, make this red, serious right there. Looks good to me, so now if we pull back to here, we now have a problem at a macro scale I want to check out as well. That's how I chart the S&P 500, and again, you can apply that at any time frame, whatever it is, but for now, that's what I use. The best tool, I don't like to say time in the market, but the best tool for me for my entries is the CCI Indicator. What we're going to do, because the goal of this macro index right here is to tell me when we're at value at the whole market or we're overbought as a whole market. The CCI will show us when we've pulled back nicely. I'll show you. So we're going to use SPY for this. I want to show you the CCI indicator and how I can use it to enter my stocks at a better discount and with better timing than most